Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, September 1st, 5:58 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction. Leaders, it looked like early in the day today was the piano player day for the leaders. That means the piano players were the leading stocks. I should say the leading stocks are the piano players in the house of ill repute. And when the law comes to raid the house of ill repute, everybody goes to jail, including the piano players. Really getting hit hard today, but we had a nice bounce off of support and really some nice bounces in some of the stocks that have held up pretty well. We'll go through a bunch of charts tonight and take a look at that. So leaders still neutral, still with the arrow pointing to red because of the precarious situation with the major averages. So short term, our signal is bearish / downtrend, which means all 5 of the major indexes are trending below their downtrending short-term 21-day exponential moving average. Medium term, we're battling at the 50-day moving average. All 5 of the indexes with at least one close below. We want to see how the week ends to see whether or not this indicator goes from neutral to bearish at the close tomorrow. Long term, we're firmly under the 200-day moving average across all 5 indexes, so bearish there. But what just happened today? We had a strong bounce at major support. So there was a big support area at the 3,900 to 3,920 area. And this was day 5 down off of Jerome Powell's speech last Friday from Jackson Hole, where the market just initiated a harsh sell-off and had continued to sell off all this week. Today was the 5th day down, and I just think sellers got exhausted today. I'll go into that when we go through the tail of the tape, but for now, strong bounce at major support. It didn't get any help from growth stocks for the most part, as the G6, that's our in-house 6 ETF composite indicator, down 1.3%. S&P rebounded from being down 1% to down more than 1% to being up 0.3%. NASDAQ 100 from firmly red to barely green. Dow led today, ended up 0.5%. Midcaps down 0.8%. Russell down 1.15%. 60/40 global diversified stock bond index down 0.28%. In-house, we were down 0.13%. We'll go into some charts in a second, but first let's get into why we do what we do here at Revere, and I'm going to show you, as usual, a chart of the S&P 500 via the SPY. So actually, I'll start off with the S&P 500. Still having problems with MarketSmith charts. So what we do at Revere is assess the overall health of the market across 3 time frames, as you saw with the trend gauge. When the markets are healthy, we then look for nice gains in leading stocks in the leading sector. So this green line here is a short-term 21-day moving average. The red line is the intermediate-term 50-day moving average. The black line is the 200-day long-term moving average. When the markets are trending above this, this is the ideal setup for a market. Not really anything to be concerned about, but that never lasts. When stocks start rolling over, we'll take a little bit off the table. Our stops will get hit. We'll lighten up as we get below either our short-term and or the medium-term moving average. Sometimes we go decisively below those, and the slopes of those lines roll over. And if we get below the 200-day moving average, this is when we get in a very defensive posture because, and you're probably tired of listening to this, but until you tell all your friends and family, I'm not going to stop talking about it. This is the last 13 bear markets. There's a concept of investing called sequence of returns. If you're approaching retirement and you get caught up in one of these nasty sequence of returns that is negative for your portfolio, you may not recover from it. So imagine somebody coming into retirement early 2000 to 2002, thought they had $2 million, ended up with $1 million. 2007, 2009, thought they had $1 million, ended up with $470,000. This can happen when you get below the 200-day moving average. That's what is in common with every single one of these bear markets, is that they occur under this black line, the long-term moving average. So that's when you want to get at a maximum level of defensiveness. If you're going to have a small account and you're going to trade growth stocks of it, and you're going to have a big 401k and leave it in the market under the 200-day moving average, that's the equivalent of getting your teeth whitened while you don't get your cancer treated. That doesn't make any sense. The cancer is going to eat away at your portfolio if you're under the 200-day moving average and we continue to go down. But if you have a small growth stock portfolio and you're happy because it's in cash, it doesn't matter. That's cosmetics. You need to take a dedicated approach to not getting your money taken back by the market, because that's just what will happen. I'm not trying to fearmonger here. These are statistics. They're facts. If you get a 44.5% drawdown like you have in 6 of these most recent bear markets, it takes you 80% to get back to even. At the worst in July, we were down 24.5%. We're now down 17, 18% after this most recent pullback. A lot of pundits saying we're going to go lower. We don't predict here at Revere. We just take a look at what's going on with the indexes, the levels, and the leading stocks, and we make our decisions accordingly to what's going on. It's what we see. It's not what we think. So if you're interested in this approach, give me a shout. Email don@revereasset.com, 855-REAL-WEALTH, 855-732-5932 is the phone number. You'll talk to Revere President Dan Stewart, and he'll be glad to answer any questions for you. So let's get a little bit deeper into this. I'm going to bring up the SPY here and what we saw today. I'm going to bring up a 60-minute chart. And what this shows is focus on this 390 area here. So back in late July, we started a little bit of a rally. We broke above this 390 area. Let's go back to a daily chart so we can see it. So here we are in July, trying to start a little bit of a rally here, getting above this 390 area. This inverse head, this head and shoulders pattern is what I'm looking at right here. This is a shoulder. Here's the head. Here's the left shoulder. When you break below the line, the neckline, which is this area right here, the way things are measured is from the top of the head to the neckline is about approximately how far down you can expect to go, and that's pretty much about what happened with this head and shoulders. So at the bottom, this 390 level, you can see how it was resistance. We rallied off of it. It came back. It turned into support, and we had this nice gap up here on July 27th and led off this nice bull run all the way up to the top here on 8/16 back to the daily chart when we hit this 200-day moving average. And then we've just come down since then. But what happened today is, as I said, sellers just got exhausted. Here's day 1 down, day 2, day 3, day 4. Today was day 5 down. We found support at this very logical area, this 390 area. If you want to go to the S&P 500, you can see that that is the 3,900 area. And we just bounced there. Sellers exhausted. We took a nice bounce off there. We took a nice position in SSO on this bounce as we saw it hold several tests, get above. This is just a tactical play that we're doing. We'll see where the bounce goes. We're already profitably nicely in it. And let's see how it works out. At worst, we'll be out at break even or a very tiny loss. We got back in lower than when we sold earlier this week, when we took our final exit on the break of the 50-day moving average and our final SSO position, which we initially took back here when we broke above the 21-day exponential moving average and went on this nice run higher into the 200-day moving average. So that's what happened on the S&P 500. Let's go to the NASDAQ 100. Very similar setup. Negative reversal off of these lows. This coincides with pretty much the same setup. Going back, and really what this tells us is today is a critical point on the short term, and if we break today's lows, we've got big problems. Now, it's very possible that we just rally up a couple of percent. In fact, that's probably the most likely scenario with all the selling that we've seen. Let me blow this chart up a little bit more and take a look at this 50-day moving average, which is where that's the first level of resistance that we'll end up coming into that recently was support that was broken. Let's go back to the SPY, and you can see that's the level that we're looking at here around this 400 level, which equates to around 4,000 on the S&P 500. We get into there, we start to fail. We'll book these small profits for this tactical trade that we made, and we'll reassess, see where the leading stocks are, see what happens with the rest of the indexes. So let's move on to the Dow Jones Industrial Average. Also a bounce today. This was a large cap bounce for the most part. That's what had been lagging in mid caps and small caps, holding up a little bit better, but they gapped down and didn't recover anywhere near as much on a relative standpoint as the big caps did. You can see the pointing down in the relative strength line really all of this week. And their first close below the 50-day moving average. That's MDY for the small caps, MDY for the mid caps, IWM for the small caps. Look at IWO. This is the growth half of the IWM. Doesn't look any better. Had some relative strength back here when we were rallying up. Growth stocks were the leaders into this 200-day moving average, but once that failed, all bets were off as we started to break below these various moving averages. So let's take a look at, first of all, let's swap to the tail of the tape. Correction, nothing really has changed up here. We're still rallying under the bear case. Some news that led to the gap down this morning. After the close last night, the U.S. government restricted NVIDIA and AMD from chip sales to China and Russia, and that hit the semiconductor sector, trickled over to the QQQ and the tech portion of the S&P 500, which led to a gap down before we had the bounce today. Some notes, let's look, we're expecting a reaction one way or another to the government jobs report that comes out before the open tomorrow morning. And this note is basically my take on today's action was it was just seller exhaustion because we didn't get any benefit from the US dollar or interest rates. Let's take a look at UUP here. This is a chart of the US dollar, and you can see it broke out of this cup and handle or flat base to a new high. So if this fails, that would be good for stocks. If we get back into this base, back below this 2920 area, and I'm going to set an alert right here while we're doing it, we get back into this 2920 area, that means the breakout failed, and that would give stocks a little bit of benefit. But let's look at the TNX, the 10-year yield, and you can see it broke above this little support area too, not to all-time highs the way the dollar is, but it broke above this little congestion area here. So stocks would probably like to see this pull back into this consolidation area as well. Just the opposite is what you're seeing on the TLT as it breaks down. So if the TLT gets back into this area here, the low of which was 111.58. Let's go ahead and set an alert in real time here before I forget. So alerts are the key to a lot of what we do here at Revere. You can't watch everything all the time. You got to have your alert set as a trigger to some action that you might take. So expectations coming in today were a combination of negative and neutral. Negative because we broke the 50-day moving average, but neutral because we were already on our fourth down day, and it was looking like we were negative going into the fifth negative day before we had that day 5 bounce off of this major support area at the 3,900. So here it is, 3,900, the support area that I was watching coming into today. Strong bounce off of that. That also coincided with this 293 to 296 area in the NASDAQ 100, which we also undercut and bounced off of. Let's take a look at the 5-minute intraday chart so I can talk about why we did this, what we were looking at intraday. So we gapped down, 5th day down, into major support. This is just a setup for a bounce. When you gap down into major support and you stop going down, you can see we tested it here. We tried to pull back here, it held. We tried to pull back here, it held. So then you look to where we were earlier in the day, and could we get above that? So the first signal that something might go is when we broke back above this 39.28 area here, which we did. Now, what would be optimal is if this area was tested on a pullback, and that's what we got exactly. These candles here around the 2 o'clock time frame Eastern, we pulled back. We held this 39.20 area, which just corresponds to this whole mess earlier in the day that we could not get back above. So this is a case where what was resistance turned into support on the pullback, and we took off from there. And this is where we did 4 buys, 10%, and then another 5%, and then another 5%, and a nice rally into the close. So 20% position in SSO. Early in the day, when things were weak, we did get stopped out of a lot of long positions, but we can't be scared that we got stopped out of a couple things if the market starts behaving contrary to what we're looking at. So we'll take a look at those charts momentarily also. Here are the numbers for today, the high and the low today, 39.04. Sorry, I had a client meeting afterwards that went longer than I was expecting it to. So I hastily updated this and didn't get everything taken care of. So what was strong today? Right out of the gate, growth was lagging with the XLP, Staples, XLU Utilities, and XLV Healthcare leading out of the gate, and the G6 really getting clobbered. It did bounce back a little bit in the day, but the dollar was strong. That coincided with weakness in the markets before the bounce. Biotech also was strong. Let's take a look at XBI as this led for a while and then underwent some recent weakness. Let's see where we stand here. We bounced really about where we wanted to, which was this prior area. So we had a breakout and now we're back testing it. Could be that these lows are put in biotech now. Again, today's lows are going to be critical for just about every chart that you're looking at, because a break of this low will mean another move to the downside. So that's what was strong. Bonds were weak. SOX was weak because of AMD and NVIDIA. Oils were weak all day, really rallied a little bit in the morning, but no strength. Cloud stocks extremely weak as a bunch of Viva, former leaders, Viva, MDB, and Okta all smacked on earnings. Take a look at this chart. William O'Neill, one of his stats is, former leaders correct 72% on average from their top. You better pay attention to that stat, because here's a chart in OKTA, former software security leader, that has now gone from 294 down to 60. That's like right around in that 72% wheelhouse, down 34% today on a terribly received earnings report, even though their sales were up 43%. So, man, you just got to get out of the way when these things, when their time is up. You just can't hold on to everything forever. And I know a lot of people like to talk about, oh yeah, well, yeah, Amazon lost 90% of its value, and look at it now. Well, for every Amazon, there are 480 failed stocks that never come back from that. And you just can't catch falling knives, and you got to get out of the way when the 200-day moving average is broken. XME and KBE also weak today. So let's go through the focus stocks, and then let's go through some leaders and see how they ended up today, and we'll go through our trades. So I already talked about SSO. We got stopped out on our last position of Wolf today, and it put in a hammer. This is just part of trading. You're never going to catch everything perfectly. We made up for it by getting back into the SSO, and the losses in this were more than made up by the profits that we made on that today. I like how it didn't break below the lows of the gap up day, but when you got to protect your cost basis, and we got back near even on this and just pulled the plug on it. LNG has gone from really being strong to some exceptional weakness over the last couple of days. Sold half of it today, closed below the 21-day moving average for the first time. ExxonMobil, we're still clinging on to this. This came back decently during the day, as did everything, but rejected at this 21-day moving average. So that's on a short leash. We're about neutral to maybe down 1% on that. Shockwave, I think this continues to just act excellent. Bad day here, bounced yesterday, bad day here, but it held right where it needed to at the 21-day exponential moving average, and then rallied nicely late in the day. This actually started cutting into its losses before the market even started to turn to the upside. So I remain convinced that this is basically the leading stock in the market. Let's look at Apple really quickly, because it's kind of a microcosm for what's going on. Undercut and reclaim of the 50-day moving average today. That makes today's lows in Apple even more important. 154.67. I've got an alert set right around that area. If that fails, the market's going to fail. I think that's a pretty fair statement to make. So bottom line, upside reversal off major support signals a short-term bottom. That bottom could be a day if we break below tomorrow's low, but My take on today's action is that sellers were exhausted, and we'll see what happens. We never make any predictions. I'm not saying today's the bottom, buy everything. Um, just not. But short term, it's what we want to see, and if it holds, it holds. If it doesn't, we're prepared to act either way. So let's go first of all to the focus list that I was looking at today. These are a handful of stocks off the 21 over 21. They had varying degrees of success or failure today. First of all, lithium. Weak all day, nice bounce. Where? 21-day exponential moving average. I'm noting a lot of the 21 over 21 undercut today. Some of them reclaimed, some of them didn't. Lithium did. CEG, this is one of the strongest stocks in the market also. Up on the day, not making lower lows along with the market. So look at the relative strength line on this. You got to love that. CEG acting very well. Probably the number 2 stock in the market. Not a lot of people are talking about it. Oxy, the premier oil company, closed right on its 21-day, right just barely below the 21-day EMA today. If this bounces, today's low is going to be critical for Oxy. As you can see, this big volume breakout on the news that Warren Buffett could buy up to 50% of the company. If you wanted to get in, you've got a nice 3-4 day pullback here right to the 21-day low below today. Today's low should hold if oils are done going down, and I'm not saying that they are. GFS bounced at the 200-day moving average, but below the 21-day moving average now. So not a good look there. CCJ, very strong uranium company. 2-day pullback, bounced at the 8 EMA. That's still looking good. That's certainly in the top 5. And First Solar acting well also. Hasn't even closed negative the last 2 days. That's extreme strength. FSLR certainly a top 5 stock also. Let's take a look at some other leaders and see how they fared today. Celsius, early leader out of the gate, first close below the 21. A lot of stops, I imagine, were triggered on this today. Today's lows and today's highs are critical for Celsius. If you break today's lows, you're probably visiting the 50-day moving average. Let's see what else. ENVX has been a recently strong stock, but not today, with a 10% down, closed right on the 21-day exponential moving average. Palo Alto recently strong with its gap up, harsh down day today, but it did bounce at the 21. Buying these stocks on pullbacks or off the 21 has really been the only way to make any progress lately on these, and anything that bounced at the 21 today is a good reference point with today's low. MPWR, former leader, this one's broken now. First you break the 8, then you break the 21, then you break the 50, then you go down from 541 to 400 in 2 weeks, and this is why we have a sell strategy. D-Dog, loser, got a downgrade. Again, this is why we have a sell discipline. So that's going to wrap it. As always, love to hear from you. You can email me, don@revereasset.com, phone 855-REAL-WEALTH. That's 855-732-5932. Jobs report before the open tomorrow. Let's see how stocks react to it, and let's see if today's low can hold, and let's see then if it does hold and we rally up into the 50-day moving average on the indexes, how they respond then. So wrapping up, the first day of September, Thursday 9/1. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.